and banker. Today, I wanted to cover Bill Ackman's SPAC unwinding since the news broke out, I believe, sometime 2 days ago. Now, this video will be recorded in real time, so do pardon me if I have any hiccups along the way or any brain freeze. Let's jump right into it. So, Tontine. Now, I found this article by Wall Street Mojo, and I thought it was pretty amusing. So, Tontine has a meaning going back to the 19th century, right here, around the 1800s. And it was used to describe a fund in which a group of people would contribute a pool of money to finance a project, right, or a series of projects. So some projects would be government, and I assume some would be municipal. Now the difference between a tontine and a mutual fund, which is how it sounds like so far, is that the tontine is a bit more macabre. So in a tontine, if any one of these people passes away, the pool of money will then be distributed equally among the surviving members. Alright? So in essence, any member cannot nominate their family member to take on ownership in the event of them passing away. The fund then, excuse me, the fund then would just simply grow bigger for the surviving members. So it's pretty much a dark game of survivor in a financial setting. And yeah, I kind of think of it like musical chairs. The last one sitting gets all the chairs, if that analogy works. So here there's some math. 10 people come together to form a group. Each person is paid 5%, which in absolute amount terms is $10. If two members pass away, as you have learned, above it, the share of the dying members is shared amongst the living members. Alright, so now each living member gets $12.50. So in other words, the more people that pass away, the bigger your amount gets. So as you can see, understandably, this kind of fund was misused and gained. So this is another article, 17th century game of survivor. Okay, so over here it says 19th century, but here it says 17. So I guess, yeah, 200 years of difference between them. But anyways, let's see. So look here, figuring out ways to game the system, for example, by nominating young girls from families with histories of longevity and forcing the state to pay out yearly dividends for decades. And of course, there were also other loopholes which I read about, such as families that disputed death certificates. Anyways, let's move on. So this was a recent, not recent, 12 months ago video where Bill Ackman first appeared after the SPAC deal fell through. So let's give it a listen.
A place effectively of the SPAC, but tell us what happened.
Sure. So just to rewind, if we go back just a few weeks, we announced the transaction, and a couple weeks later, before we signed the deal, the SEC came to us and said, we have some concern about whether RemainCo, this entity we were creating, was going to become an investment company. In order to address the SEC's concern, we changed the structure of the deal to provide that we were going to contribute the stock that we purchased to a trust. And we thought that would address the issue. And then we signed the deal, and then we pushed forward with the transaction. And then actually in last few days, the SEC raised, I would say, a deal killer, which is they said that in their view, the transaction did not meet the New York Stock Exchange SPAC rules. And what that meant, I would call that a dagger in the heart of the transaction, put Tontine in a very awkward spot. And we love Universal. We were excited to bring this deal to the Pershing Square Tontine.
All right. So the rest of the video goes on to say how great a deal Universal is. I'm not going to play that. Now, when I was looking through this video, one thing that stood out to me was that Bill had initially found a target in Universal Music Group. However, he had not gotten the SC's approval, right? If you recall him saying he thought that it would go through, therefore he signed the deal first. Now, understandably, I think Bill was under a very tight deadline, so it resulted in him acting in an untimely manner, so to speak. I guess a saying would be jumping the gun. Now, if he had more time, he would take modest steps to do due diligence, to wait for the SE's approval before taking out the pen. And this is why I think he is banging the table so hard on a spark, right? So a spark allows him to have more time instead of the 2-year deadline, and he therefore would have more leeway in negotiating a deal, finding a good target, and getting right the paperwork before any signatures go through. And yeah, this is why I think Bill is pushing hard on the spark, and also why I think the deal ultimately failed. Now, with that said, I think that we have to give him some rope. This is Bill's first spark. Bill's first spark and SPAC. He has historically been a hedge fund manager, and a pretty good one at that. I have some respect for Bill ever since reading his book, The Confidence Game. And yeah, I mean, he isn't perfect. He has some stumbling blocks. He has some bad deals before, like Valiant and Herbalife. But all in all, he hasn't done too bad. Now, could he have done much better? Of course. I think the factor that was killing the deal more than anything was time. I think the essence of time was very tight. He knew at that point of time, I think in mid 2021, he had to find a deal because a lot of specs were crowding the market. So it's not just about his target, it's also about competition, right? And at the same time, UMG also was looking to IPO themselves, I believe, even without Acton coming in. So I will go into that a bit deeper later. For now, let's go towards what happened after. So in June, around I think end of June, Bill Ackman came out with an announcement saying that he has found a business combination with UMG. In July, the ST killed the deal. So I think 19th of July, Pershing Square came out, Bill Ackman, saying the deal is off. And in August, soon after, let's see what's the date here. There's no date. There we go, 17th of August. So it was a pretty action-filled 3 months, to say the least. In August, there was this law firm, all right, represented by George Assad, who's a plaintiff, and he actually put a case against Pershing Square Tontine, saying that they were actually an investment company and did not act in the best accord when it came to managing the funds of their holders. Okay, now it's a 49-page document, and I'm not going to go through every one of them. So I decided to do the hard work and would now just go through the main sticking points that I see, which are pivotal to the case. So first, Assad goes on to say that PSTH, Pershing Square Tontine Holdings, is the largest ever SPAC made, which is true, 4 billion in total. And the case arises because Tontine qualifies as an investment company, as defined by the investment, what is this? Investment Act, something, investment. There we go, Company Act. Sorry, brain freeze. Investment Company Act and Investment Advisory Act, if I'm not mistaken. Advisors Act. Okay. So based on these two acts, Pershing Square actually would fall under an investment company. The second point they are putting forth is that because they are an investment company, they have kind of taken more than they should have. All right, and what do I mean by more than they should have? Because an investment company only gets incentivized by investment fee income. All right, now if you guys know, the SPAC has a very different way of incentivizing the founders or the sponsors, right? In this case, Bill Ackman's team. So what they're trying to say here is that Bill Ackman, when he formed this company, it should fall under an investment company based on these two acts, and therefore they should be only compensated through an investment fee, not the way they are going to be compensated through a sponsor warrant or a percentage of the fund, which is how usually SPACs work. Now this gets a bit, to be honest, this gets a bit vague and messy because Bill Ackman's SPAC is not like any other SPAC. Bill Ackman's SPAC does not have founder shares or founder warrants compared to other SPACs, which I'll go into later. So yeah, it gets very complicated because Bill Ackman doesn't even fall within a traditional SPAC definition, neither is he an investment company. But of course, Assad is putting forth bullet points stating as to why he believes Bill Ackman's Tontine is actually an investment company masquerading as something else just to garner a higher fee income or a higher compensation. So here he goes on to say that an investment company is an entity whose primary business is investing in securities. And investing in securities is basically the only thing that Tontine has ever done. All right. Now I'm going to jump forward to point number 9. So here they underline once again that PCSM, Pershing Square Capital Management, is the company's investment advisor under Investment Advisors Act. Tontine has no full-time employees of their own and are completely dependent upon this team, Bill Ackman and his advisors, basically. So in this regard, these both vehicles have the same relations as mutual funds and hedge funds. Okay, so some comments. I think this case put forward isn't very strong. So first, Bill Ackman himself has mentioned that he found the case a bit peculiar. One, because if this case has any meat on the bone, it would affect every other SPAC that has pretty much been in existence, which is true. But that's not a very good pushback. The second stronger pushback would be that a SPAC essentially is not an investment company. All right, so why is it not the case? Now, it's a bit nuanced, but let's just go step by step. So first, Assad puts the point forward that Tontine has always invested in securities, which is true. They have always invested in money market securities up till the business combination point. But just because a fund has always invested in securities does not necessarily mean that they will always invest in securities, right? It's kind of like think of it like a flyover. If I were to say that I'm in Delaware right now, something, give me a second, I'm finding a tab. Oh man, where is it? Okay, I'm not sure if I have it, but let's just use the example of international flight. All right. If I were from Delaware, now Delaware is one of the rare states. I think it's the only state that does not have international flights. So you have to drive to another state to fly out of Delaware. That's what I think is the case. I'm trying to find the tab, but let me just see if I decided to delete it. Yeah, I think I deleted it. So anyway, yeah, Delaware is the only state in the US, you can fact check that does not have international flights out of the state, or flights at all out of the state. And because of that, if you were in Delaware, you would have to travel to, say, another state to then go to another country, let's just say Japan. So if I were to tell you that I was going to Japan and I drove my ass out of Delaware into another state, and you turned your back and said that I lied, that wouldn't be accurate, because it is true I was going to Japan, but it just happened to be that I had a flyover or a midpoint in another state. So I wasn't really traveling domestically. I wasn't a domestic traveler, so to speak. I was still an international traveler, but I just had to make a detour. So the same thing for SPAC. Yes, they do invest in securities up to a certain point, which will be the deadline at the very least, before they find a target to acquire. Now, up until that point, all SPACs have always invested in money market, short-term government securities, just to get an interest. Because if you lay the money down to a cash account, it wouldn't get any interest, and holders will be pissed. So this sentence here doesn't have a lot of sticking point, I feel. Now, what about the other number 9? Here we go. So what about this point where Assad is saying that because both vehicles share the same investment advisor, therefore Tontine is an investment fund, an investment company, right? It's not like some separate vehicle like a SPAC. It is an investment holding. This point too is not very, I wouldn't say it's not very grounded, because we can think about an example. Let's just say that Ackman and his team, they both were running for a fast food restaurant, right? So let's just say Ackman and his team were running In-N-Out. And let's say in this universe, In-N-Out has a rule all right, or okay, any fast food restaurants with drive-throughs have a rule, and the rule is that drive-throughs have to have a traffic light installed. Okay, so let's say in the near future there were a lot of jams because everyone just rushes to the drive-through. There was the fast food frenzy, and therefore it was commissioned that traffic lights would have to be installed for etiquette and proper flow of traffic. Now, if Ackman were then to start advising another company, let's just say Walmart, right? So I was reading about Walmart here, and they actually have grocery pickups, right? Which I think are pretty normal now. I'm not living in the US, so I wouldn't know, but this is what I have based on the news. If Ackman were to start advising Walmart, it wouldn't follow that Walmart is under the same umbrella and would have to follow the rules of fast food restaurants. So just because, I mean, that would be my pushback to point number 9. I would say that just because two vehicles or two business entities share the same investment advisor, that does not mean that they both have the same nature. All right, so going through this case file, they pretty much repeated these 2 points throughout the case. So therefore, it can be actually condensed a bit instead of being too wordy. And I just wanted to also show you, hold on here, page 28, if I'm not mistaken. Whoops. Page. There we go. So you see under page 15, what they're trying to do here is they're trying to link Pershing Square's team with Tontine. So they're saying that the Pershing Square management is an investment advisor to Pershing Square Holdings, and they're an investment advisor to Pershing Square Tontine at the same time. And these two are somehow interrelated in terms of their compensation. However, you can see it's a bit of a stretch. One can be an investment advisor to 2 different holdings, but that does not mean that these 2 holdings have the same purview in terms of their regulation. And the ironic thing is that he even says here investment funds, and over here is a SPAC. So yeah, there was another law firm named Winston and Strawn. They are a quite reputable law firm based out of Chicago, and they were saying that number 1, so just scroll down here, in determining how investors view a company, look at how the company stock moves. Okay, if it's in response to a change in investment income, that would mean that the company is an investment holding, which makes complete sense. Now, if the price of the stock, okay, moves in response to the target or progress towards the target, rather than any changes in investment income, it is therefore, well, they don't really say it here, but it's implied that it is therefore not an investment holding, but rather a completely different animal, which would be what we call a SPAC. Excuse me. Now, number 2 is that so again, remember I said it can be quite nuanced. So it is true that both vehicles share the same investment advisors, but because the SPAC, the nature of their work is towards seeking out a business combination, okay, and so on and so forth, but mostly they're trying to find a target to merge with. Whereas for investment companies most of the time is managing portfolios, which is very true, right? If you're under Bill's Pershing Square team, Pershing Square, the hedge fund, your daily duties would be looking at mark-to-markets, doing due diligence on companies, researching, going through 10Ks, 10Qs, right? Buying and selling stock, managing hedges, working with your prime broker on leverage, say. Whereas for a SPAC, your duties, well, after you have invested in securities, would just be simply to find a private entity, a private company that is looking to go public faster, more efficiently, and usually that would be through a SPAC. So you're just finding someone to marry with and then help operate. So quite different description from one to another, and therefore Winston and Winston and Strawn, they then conclude that for the reasons described herein, SPACs are not an investment company for the purpose of the ICA. Under prevailing case law and common sense, investors are not likely to believe that a SPAC's principal activity is trading and investing in securities. Okay, now Winston and Strawn, actually, strangely enough, I would have recommended Bill to them. They weren't representing Bill. In fact, Bill's representative, which was, sorry guys, I'm all over the place. Okay, I don't have it here, but basically, Bill's representative was someone named Cantor, I believe, and he basically said that that the fund does not fall under the ICA, and that this lawsuit would actually impede Bill's job to find the target. It was just a one-pager. I can't find it right now, I'm sorry, but I will try to put it in. I think I'll try to put it in a description below. So yeah, they just responded like a 3-pager to Assad's 49-pager. Let me just try to delete some tabs here. Yeah, so this is Winston and Strawn. So, okay, this is supposed to go to back. But now the investor has dropped the suit because, Pershing has decided to cease operations. Okay, so where were we? Okay, page 28. No. I'm trying to find the, hold on. There we go. Let me just zoom in a bit. Okay, so this is a timeline drawn out by Assad, and in here, he's pretty much trying to say that Tontine is investing in securities of UMG, even though he has not. Okay, so he kind of switches his story a little bit, and I'm not going to go through the whole passage, so I'll just summarize it for you and walk you through the map given out here in a more pictorial view, which I think easily understandable or easier to understand. Now, Assad then slightly twists the story by saying that it may be true that Tontine currently invests in money market funds to then be invested in a company. But he then says that even if that were the case, when Bill invests in such a company, it is still in securities, which would be equities, right? And that is technically true. So what he's trying to say here is that Bill Ackman, when he is merging with UMG, it is not like a regular de-SPAC. It is actually buying a partial stock of UMG, which was going to go public anyways. Okay, if you guys can catch my drift. So I found an article which was written, and I think it was written September last year. So you know what, let's skip that article. Yeah, let's just go to this one, October 2020. So if you guys recall, around June of 2021, Bill Ackman actually announced his SPAC deal with UMG. However, in October 2020, Universal Music Group already had planned to launch an IPO. So this is where it gets interesting. Assad has some meat here, although it's a bit of a stretch, but I think there is some backbone to the point he's making. He's saying that Bill is not merging with UMG through a traditional de-SPAC, right? Where, let's say, a private company like Grab Holdings, I think it was this year or last year. I think last year, they merged with Alimeter, and from private they went public. So that is how a conventional SPAC works, right? They find a target company that's looking to go public, but not through an IPO. They then go through a SPAC, which is another method of going public besides direct listing and IPOs, and merge with the public company, which is a SPAC, and therefore, gets their public shares listed. So it's pretty much saying that, hold on, let me just gather my thoughts. Yeah, it's pretty much saying that Universal Music Group actually was planning a traditional IPO, and in any event, did not really need Ackman to go public. So that's pretty much what they're saying. And I think that is true. I mean, Universal Music Group, based on this news here, I'm not sure how reliable, but they have actually planned to launch an IPO. And I did read this from a few other websites as well to substantiate this. So yeah, they were already having plans about give it about 6-9 months, before Ackman found the company or announced his finding of the company to be merged with. So therefore, it seems like Ackman is actually investing in equity, right? It would seem like you're a SPAC, but you're actually acting like a hedge fund that decided to invest in equities of a company that would be soon a public company. It wasn't a private company that was finding a way to go public via SPAC. Okay, so this is quite interesting and unusual, to say the least, because if that's the case, then yes, is it really true that Bill is acting like a SPAC? If all he's doing is just buying a stake in a company, it's kind of like a private placement, right? When I used to manage some IPOs for one of the biggest IPOs I managed was Ant Financial, which was a failed IPO back in 2020. And yeah, our investors could get in because they had links to the family fund, and it was a private placement. So in that regard, Ant Financial, like UMG, was going to go public, but before going public, they would open up their rounds to private investors, right, to big institutional money. So the case Assad is making is that even though they say that they are going to de-SPAC and invest in such a company, it's not actually a way that a SPAC would invest in, right? It would just be investing in further securities. And all this to say is to bring back the point that Tontine is an investment holding company. It's not a SPAC. Now, Bill wasn't doing himself any favors here because his SPAC, I've mentioned before, is a bit unusual in nature. So, and I don't think he did this maliciously or absent-mindedly. It was just because the fund was really too big and he couldn't put 4 billion to work at one go. But unfortunately, that gave his opponents bullets to bring down or try to bring down the fund. Okay. So after that, in a strange turn of events, 49 law firms, and I believe more came in later, they actually coalesced to fight the allegations put forth by Assad. All right. So so this was the news here. Robert Jackson and John Morley filed a civil suit against Pershing Square. Sorry, am I getting the names wrong? I thought it was. Let me just see, Morley. There we go. Yeah. Okay, sorry. Yeah, they're representing Morley and that professor guy. Hold on. Yeah, here we go. 49 firms. So subsequent to that, the professors filed additional suits against these two. Now I did do a quick sweep on these two firms as well. The cases against these two firms, and yeah, the same thing. They were saying that these two firms have the same investment advisors, and they were investing in securities. Therefore, they are to be considered investment holding companies. Now, 49 law firms, many of them top tier, signed their names saying that the undersigned law firms view the assertion that SPACs are investment companies as without factual or legal basis. So this is where it gets a bit humorous. Getting lawyers to agree on anything is usually pretty difficult. Getting 49 of them to agree on this statement is remarkable. Excuse me. So there we go. Now, the story doesn't end here. It actually gets spicier. So once these 49 firms came and united against Assad, okay, once that happened, there's 62 shareholders and 49 firms. So I remember there were two parts of this news. The first was 49 law firms came back and said that the statements were factually incorrect, that SPAC is an investment company. After that, there were 62 shareholders with a 25 million stake in Pershing Square, Tontine, filed an amicus brief. Now, an amicus brief is kind of like in Latin is a friend of the court, and it would just be giving supporting testimonies without them actually representing without them actually representing any particular party. It would just be giving additional views or perspectives to the court. At least that's how I've read it. So yeah, I'm not a lawyer, but that is how I read the meaning of amicus curiae or brief. Friend of the court can set out legal arguments and recommendations in any given case. All right. Okay, so this is the lawyer for the shareholders, the 62 of them, Matthew Peller. And yeah, so basically that's saying that, now if you recall, let's take a step back. If you recall, Assad was saying that the investors should see, or okay, maybe he didn't say that in exact terms, but he was trying to make the case that investors have kind of been duped in that the SPAC is actually an investment company, not a SPAC, not a different vehicle, or it should always fall under the Investment Act. And here, the 62 shareholders are saying that they believe that they have not been misled, and a SPAC's mission is to identify and acquire a private company. It is not to invest in holding securities. It's not to invest in securities. Now, why is this important? Because it's important because they want to see the end user, being the shareholders, how they actually view a SPAC, right? If the shareholders would come forward and say that, yes, when we invested in such a SPAC, we actually thought that a SPAC would invest in securities. It would provide further ground for Assad's case that you see, even the shareholders believe that a SPAC is an investing company, a holding company. It is not just because it's under the law, it's also because their end users, their customers, their shareholders also believe that is the purpose of a SPAC. Okay? So this is what happened. It was actually the opposite. They came out and said that no, a SPAC is not an investment company. It is actually to acquire a private company. So the investors told U.S. District Judge that the entire premise of the lawsuit against Tontine is wrong, as you may recall, and then it goes on to say the case we have already covered. Okay. So here we go. The investors rejected that theory. They said they didn't buy the shares of SPAC to obtain meager returns from government securities while pushing short for a target. Shareholders said they invested because they trusted the SPAC sponsor will make a deal that would boost the value of the shares. Now, here is where it gets quite, I'm not sure if it's like dark humor, but let's just go through it. Did the shareholders independently reach that conclusion? Now, in a response filed by the professors that first brought up this case, they are saying that the origins are suspect and its arguments are wrong. Okay, so the law professors contend that shareholders who signed the amicus brief got more than a little help from Pershing Square. The brief, they said, appears to have been organized on the internet message board Reddit, where SPAC investors discussed the motion to dismiss the lawsuit and mused about how they could help. On the 1st of December, one of the Reddit participants recruited shareholders to sign the brief and posted a message saying he had received from Pershing Square's, posted a message that he said he received from Pershing's IR, right, their relations department. Alright, and then he goes on to say what the sentence is. So the professors are now saying that it showed that Pershing Square lined up a lawyer to posit arguments and disguised it as an amicus brief. Okay, so in essence, what they're trying to say is that these guys, and when I say these guys, I mean Pershing Square. Pershing Square used a lawyer and they fed them supporting talking points before recommending their name to the Reddit shareholders. Now, Reddit shareholders then took up the name and said, yes, please let us file an amicus brief. And the law firm would then take this amicus brief and add in bullet points provided by Pershing Square, right? Add in like, let's say Pershing Square would say something like, we aren't an investment company because our purpose is to invest in a private company. What the professors are stating is that this thought was not put forth by shareholders. It was actually put forth by Pershing Square, and Pershing Square then recommended a law firm, which was eventually used by Reddit shareholders to posit their points in the court. So it's kind of like a backdoor way of arguing your case by way of an amicus brief, right? So here to say, okay, I'm in, don't even really understand what I'm doing here, but fuck George Assad. So here, they're trying to say that the absurdity of basing legal conclusions on the espousals of the SPAC, the law professor suggested is laid bare in the Reddit post. Okay, so I'm not really sure why this is linked. Okay, I get it. So it says here, it showed that Pershing Square lined up a lawyer to posit arguments it wanted the judge to hear, using shareholder supporters only as tools, right, to get the arguments across to the court. So yeah, they sentenced it much more clear than I did. Sorry for that. But yeah, that's pretty much what I was going with. So there we go. Pershing Square, Kaplan and Fink. So this is the letter. Great. Let me just show you. If I'm not wrong, it was a 3-page letter. Oh, 2-page. So there we go. Oh, sorry. This letter is actually a response. Sorry, there's just too many letters flying around. I think this letter is a response to this. Okay, so series of events. First, Assad, representing the lawyers, brought forth the lawsuit, right? Then the 49 law firms came back and pushed against the accusations, and then 62 shareholders filed an amicus brief. The lawyers then said that this amicus brief is a disguise, is actually a law firm working with Pershing Square to fight back in the case, but they're using shareholders to put forth their case, yes. And then Kaplan and Hacker then fight back again, saying that this is not the case. The amicus brief was independent, and the lawyer was not hired by Pershing Square to fend for shareholders. It was just a recommendation. Right, yeah. So let me get my bearings a bit. I'm also a bit confused by all this action going on. Okay, so after all that, the storm settled, and as you know right now, the lawsuit has been pretty much thrown out because, you know, Bill has winded up the fund. So yeah, that is kind of the, I guess you could say, the crescendo of the whole story, you know. The lawsuits, that was quite an entertaining watch. And now we come to June. This was an article I found from SPAC Insider. So what happens to shareholders now, right? I guess it's a question. And so here, you know, they said to say there's been some drama around PSDH would be a wild understatement, and surely that is the case. Now, Bill Ackman actually has filed a new S1 for his Spark. Okay, so all that has been done, and milk spilled under the bridge. Bill is looking forward to a new vehicle, starting fresh, starting anew, with a Spark. Now he has learned, as you can recall, sorry, from the video that I showed, he has learned that his key downfall was time, right? It's always a folly to work against Father Time. So he is now extending his time period to, I believe, 10 years. Okay, let me just find, there we go. Sorry, not here. So as you can see, I'm not a very organized person. There we go. The SPARs, okay, now they call them SPARs. The SPARs will have a 10-year term. The length of the term is not intended to suggest that Spark will take 10 years. Rather, it is intended to improve the Spark's ability to find the transaction on attractive terms. This longer term will remove the perceived deadline, which causes pressure. So you see, like, the whole purpose of the Spark, I would say the main purpose of the Spark is for this 10-year gap. Now, Bill of course says that there's also a good thing for the Spark, that shareholders can only agree on the terms after the business has been announced, but I think that's secondary. I think the primary purpose for the Spark is to actually give an additional 8 years, if it happens to take that long, for him to find a business without any blowback. Now, of course, it is really hard to sell this idea that your money may be stuck with the fund for 10 years, because a lot can happen in 10 years, right? I mean, if you look at the SPY or any ETF, I think if you pick any point, any date over a 10-year term, it would show profit. Now you may say, okay, he's not going to take 10 years, right? Which is true, but he could. But let's just even say, I would say 3, 4, 5 years. It has always shown a net positive. 1 year, 2 year, I think 1 year, yes, a negative. 2 years maybe flatlining, but 3, 4, 5 years, you're looking at positive returns. So a 10-year would be a pretty hard sell. All right. So let's just look at this. 5 years. I mean, yeah, look, 2000. Okay, fine. So it's not only 5 years. Okay, 10 years. Okay, you know what? Recency bias. I think I've just gotten knee deep in the market just over the last 10 years. So I always thought the market was going up. I guess over the long term it did go up, but sure. I mean, if you backdate it sometime from 2000 to 142 to 2010, 2008, you're looking at a flat performance. Yeah, you're looking at pretty flat performance. So yeah, you can kind of disregard that. Sorry. But regardless, I think 10 years is a bit long. Now, what was I gonna say? Let's go back to that article. Where it is? Here we go. So yeah, this is the new S1. He stated that it would be impossible for him to complete a SPAC transaction. The first S1 was filed nearly 7 months ago, and PST is now quickly approaching its completion deadline of July 24th, 2022. Right, which is about 10 days from this video. Now, they have technically qualified for a 6-month extension, but as we now know, it has been liquidated. Ackman could announce a new combi, but a new combi and still have time to close by Jan 24th. I think though that this move is much more palatable compared to a strenuous, further 6 months down the road, especially based on how the market has been doing so far. Okay, now the upside to all of this, if there is any upside, I would say, number one, let's think about another universe in which, okay, so by the way, right, number one, I would say SPACs have underperformed since last year. So this is a company called Grab, and they actually went via a SPAC IPO called Unlimited. Now you can see the performance from the IPO. So yeah, it was last year, December 2020. they are down almost close to 80%. Now, Grab is actually the biggest food delivery apps in Asia, which is where I reside. So I'm not really sure what's going on, to be honest. I think investors are a bit more selective right now, and they're looking for profit, cash flow positive making companies in this distressing period. Therefore, I think growth companies that require more funding and honestly have quite low barriers of entry. I mean, it's not that hard to start a delivery app. You just have to get a lot of the hard part is getting a lot of funds and capital in. But yeah, there have been new apps popping up. Foodpanda is one, and a few others that I can't really recall. So yeah, I guess for now Grab has the strongest marketing brand, but you know, it's not always the case. There could always be new competition coming up with new ingenious strategies to take part of the market. So I think investors are still a bit skittish on the idea of a loss-making company that requires a lot of maybe further debt or may raise more capital through equity offerings that would further dilute their shares. But we're not talking about Grab today. Let's go back to UMG. Now, if the fund had invested in UMG over 1 year, you would be down about 15%. Right? Now, granted, I guess a positive way of looking at it is that for Pershing Square investors, you're getting back the capital you put in, unless you bought at a premium, of course, which I think some of you did, above $20. So yeah, I guess for those shareholders, you're gonna have to swallow a loss. But all things in account, I mean, if I compare it against other companies that have gone, other companies that have gone public, and companies that have companies that would have been your target, like UMG, you know, you will still be suffering a loss. So I guess it's like the best of the worst case scenarios. Right? And this is a D-SPAC ETF. It shows you the performance of all companies that, not all, 25 of the largest companies that have completed the business transaction within 1 year of the index screening date. And you can see that it too, over 1 year, can I do 1 year? 1 year. Whoa, what's going on? Is this guy, is this spazzing out? Okay. Yeah, let's just use this. So yeah, it too has gone down. All right. Yeah, so that's pretty much it from me today. So Pershing Square drops a suit, money is returned, and we live to see another day. Will Spark get... Okay, so I guess the ending of this video, I just want to cover a bit about Spark. So this is the latest article by Spec Insider. I would suggest you guys follow this website, specinsider.com. They do very good coverage on any hedge funds, any specs. Any specs in the business. So this was announced 3 days ago. This was published 3 days ago on the announcement of Pershing Square liquidating the trust. So this is the letter you can read. you know what? Let's just read this for fun. And so yeah, the latest, I would say the next development would be the S1 on the SPAR. So once the registration statement is approved, iPhone intends to distribute SPARs to Tontine shareholders as of July 25th. However, there is no guarantee that the SPAR structure will be approved, and iPhone goes on to note that they don't expect the registration statement to be approved until later this fall. So yeah, we'll just have to wait and see. And it's, I guess, from the onset, the thing that would concern me would be the target companies, right? If I were a company and Bill came to me knocking my door and said, "Look, I have this amount of capital." Actually, you know what? let's rewind that. Bill knocks on my door and said, "Look, I don't have any capital. I don't have any capital with me right now. You know, it's just a SPAR, meaning that you have to agree to merge with me, and then I will go to my shareholders. If they say yes, we have a deal. If no, we don't. So for now, I do not have any capital. Furthermore, your shares, because from what I read before that, wait, let me think. Where was I? Yeah, I think it was in the Pershing Square announcement. The SPAR would not be listed on a normal Nasdaq exchange. It would be actually listed on an OTX, over-the-counter exchange. Let me just see if I... Let me just see if I can find... No, I don't think I have it, guys. Let me see if I can find it here. Because I think that's quite an important... that's quite an important... Okay, so look here. This was filed in June, on June 16, 2022, right? Which was about a month ago. So as of then... No. Okay, sorry, I'm jumping all over the place. Let me just do this. Okay, just give me a while here. May. Oh, crap. Oh, there we go. So this presentation was given out sometime in February this year, I believe, and at the point of time, Bill was saying that the SEC had until May 8 to approve or disapprove the proposed rule change. Okay, and this rule change was pertaining to the SPAR. Alright, it requires a new NYSE listing rule. So May 8 came and went, and in on June, okay, on June, neither the SEC nor any state security commission has approved of such a security, of these securities. Okay, these securities meaning the SPAR. So yeah, May came and went. There was nothing approved, and until today, we can see that until today, there isn't any guarantee. So I think, as a shareholder, I would be a bit concerned as to why the SEC has not approved such a deal, and it seems that there's a bit more, probably a bit more negotiation probably a bit more insight for the meetings to be held before this goes through any form of consideration. And if I were a target company approached by Ekman, I too would be a bit nervous because number one, he doesn't really have the capital yet. Unlike a normal spec where the funds have already been invested in a holding, a money market fund to be invested in the company once it's been approved. In a Spark, you actually have to get an approval post finding a target. So it's kind of like an inverse, and in Spec Insider said it best. It was kind of like an inverse spec. Now, the other thing I'll be concerned would be the listing. I can't find where I read it, but yeah, for SPAR, they are not listed on a Nasdaq exchange. It would actually be listed on an OTX exchange, over the counter exchange, OTC exchange, which would mean less liquidity, less price action, less price discovery, and just a lower price overall. So there you go. Things remain to be seen. And yeah, that's it for today. I'll be clocking out. Thanks guys for listening. Cheers.